Hi, I'm Mark from Property Ventures. Welcome to this week's New Zealand Property Podcast, where we interview the property expert around New Zealand. Hi, I'm Mark Honeybone from Property Ventures, and welcome to our weekly podcast, where we interview prominent members of the investment community, along with other professionals in the New Zealand property market. This is a free service from Property Ventures, so that you can keep current and learn from some of the best around New Zealand. To check us out, take a look at propertyventures.co.nz. We hope you enjoyed today's podcast. Today we welcome someone that can protect us and our assets. He is Chris Lane, an insurance broker who has over 25 years of experience in the field and brings us a great deal of knowledge with him. He will speak on various topics, including a new package for investors, premiums, and how to insure pre-1945 dwellings. We hope you enjoy the show. He's a property investor himself, and we would like to welcome you to the show today, Chris.
Good morning, Mark.
Right, just a bit of background so the listeners know who you are. Could you just give a bit of introduction on yourself and how you become an insurance broker?
How I became an insurance broker? Well, that was partly accidental, actually. I was looking at the careers notice board at school and thought I was applying for a share broker's job, but it turned out to be an insurance broker. That was back in Wellington, and I worked for a large corporate company there and really enjoyed it. Loved dealing with people, doing great insurance deals. I was there for about 10 years and moved to another firm which brought me down to Marlborough here, and for about 14 years have been looking after the local insurance market until about a year ago I decided that I needed to do something for myself. So set up my own insurance shop. So that's been going for about 12 months now.
Great work. And you're with a company called Hutchison Rodway. Where are they sort of based and what are their expertise on?
They are also still in mainly the commercial insurance field. We have a couple of friends of mine who operate a branch up in the North Island in Hamilton and Auckland, and I'm the first beachhead, if you like, for the South Island here in Marlborough. But they do have some really good, skills, particularly with a rental insurance facility that we'll talk about later. But mainly business insurance is the thrust and risk management advice. So that's the name of the game.
Right, and as you said, you are based in Marlborough. So a lot of your clients they're only from Marlborough, or I assume you do a bit further afield than Marlborough as well.
There's no boundaries. Obviously, sometimes it's easier to get in front of people when you're talking about insurance and interview them face to face, or if you need to go and see, their commercial site. But certainly, we have clients all over the country, and particularly in the South Island, I'm pretty mobile for visiting the nearby regions. And I also have clients, up in Auckland and in Wellington. So there's no real limits there.
Right. Okay, well, we're here to talk about insurance today, and one of the things we all notice are premiums are rising. Is it just the Christchurch earthquake, or what are other factors why that has happened?
Certainly Christchurch has been the big trigger for increasing premiums on domestic insurances. Commercial insurances go through slightly different cycles, and they're mainly driven by catastrophe claims overseas that drive the insurers' premiums up. And when you get a bit of market tension, insurers start cutting their rates, trying to retain a bit of business, and suddenly all the premiums get quite soft for commercial insurance. But the last few years in New Zealand, we've experienced something quite extraordinary, never really before. Obviously, the earthquake has been absolutely massive. But the main driver for it was, again, from reinsurers, where we used to have this fantastic policy where the floor area was effectively your sum insured. And in a nutshell, that meant the insurers had an unlimited liability when it came to fixing your home. And when it happened in Christchurch, of course, no one was really thinking that sort of a loss could happen in a place like Christchurch. The insurers suddenly found themselves having to rebuild, huge numbers of houses and just keep rebuilding them until they were fixed, and there was no cap on the sum insured. So all of the reinsurers turned around and said, well, that's not acceptable anymore. We need to know how much we're at risk for, and so we need to move away from this open-ended floor area policy to, a capped sum insured. And we had some great examples of where, the whole scheme completely backfired. There was one story with an insurer who had to rebuild a house, and by the way, you've just got to fix up this little retaining wall over here. Oops, it's $1 million retaining wall. Gosh.
Oh, right. Yep. So the insurance company had to, obviously pay out for that in the...
Yep, because there's no limit.
Mm.
So they've just got to keep paying for it. We had another good one where the definition of your house usually includes all the other little bits of infrastructure around the property. So it'll include your driveway and your letterbox and your fences and your garage and your garden shed and things like that. And someone in Christchurch had half the hill fall down on their driveway. And of course the driveway within the definition of the policy is the same as the house, and it has an unlimited sum insured to repair it. So the house itself wasn't damaged, but there was half a hillside sitting on the driveway. The fellow got a quote to clear his driveway for $9 million. And so, it sort of shows how ridiculous it all was, but ultimately his lawyer thought they had a pretty good shot at actually winning that case. I'm sure they were going to have a bit of a battle on their hands, and I don't actually know what the outcome was, but it just, I guess, puts a spotlight on what sorts of things can go wrong. And so as a result of that, we've had to move away from that open-ended policy, and at the same time, of course, the insurers and the reinsurers are passing on all their increased costs that they've incurred from the earthquake, and hence why we've seen premiums skyrocket quite a bit.
Right, so that you sort of answered two questions there in one, I guess, with that's sort of why it's and more expensive than premiums are rising, and also to the floor area why that the changes come in. So the changes come in whether you have the maximum now, or that you ring up and you decide yourself what you're going to insure your place for within reason. That's more to protection for the insurance company rather than anything else.
Well, they've tried to, from a customer service perspective, make it easy for buyers of insurance to check out what their house might cost to rebuild. There is a real danger that people are now going to become underinsured, and you don't want to cut too many corners in that regard.
No.
So it's careful, you've got to be careful to get the right advice, whether that be using some of the insurer calculators on their websites, or if you actually, employ a valuer. But you don't want to be underinsured, and certainly that's the risk you take when you get too lean on how much you want to insure it for. Just on that, a lot of the insurers have tried to, I guess, encourage people to insure adequately by not necessarily having huge increases in your premium. So if you increase your sum insured, the premium doesn't necessarily go up a great deal. So it would pay for people to make sure that they get thorough quotes and look at very reasonable, and optimistic in values, I suppose, on what it would cost to rebuild a house, because the premiums won't necessarily punish you that bad.
Yeah, that's what I was going to ask. I mean, surely the difference between having a place insured for $450 and $400K, the premium isn't going to be that greatly affected, I guess.
No.
And so it pays to get it right. And one of the things I think people weren't thinking about, if a case of a fire, for example, you have to clear the section of the house, and that could cost, depending on the size of it, $30K or more or less, I guess.
Yep, the demolition and removal of debris should all be included in your value. The calculators that the insurers provide, and certainly a valuation, would take all of that into account. But yeah, it may be if you're just chatting to your mate who's a builder, he might not necessarily factor that sort of information in, so it certainly should be included.
Right, so just on that, if someone is still unsure, I know that's been going on for a year or two now, so most people will be reasonably familiar with it. But if someone's out there and they still have no idea to what they should be insuring their place for or their rental property for, what's the best person to see?
Certainly, if you've had a good play around on the insurer websites, the owner of a house is generally going to have the best idea of the features of the property, and you can put different information in to get different answers until you are satisfied with something. But really, a valuer is the ultimate safe answer. Obviously, there's a fee to get that done, but they're the real experts in that particular field, and they will provide you with an official registered valuation purely for the reconstruction costs, and that's to start totally from scratch. Clear the site, re-prepare all the foundations and everything like that, and rebuild a house from scratch.
Right, yeah, that makes total sense, and it's a one-off cost, but it's only a one-off cost for that the time you have that property, I guess.
Yeah, I mean, you could, inflate it yourself over, subsequent years, and it might be that 5 or 10 years later, you get another valuation just to check how it compares. Some people get them more regularly than that, but that just comes down to how committed you are to paying their fees, I suppose. So,
Right. Okay, people here are listening today for insurance and wanting to see if they can get anything out of this. And one thing I think they might be able to get out of this is I was talking to Chris just recently, and he told me about the Hutchison Rodway have a market-leading insurance facilitator tailor-made for rental properties, and the figures sort of he was talking about seemed a little bit cheaper than I've seen anywhere else when I've been inquiring in the last sort of year or so. You want to tell us a little bit about this package that you have?
Certainly. Well, my colleagues in the North Island developed it, but it's fantastic. I mean, I don't think when I've been going into a competitive quoting situation against someone else or another direct insurer that I don't think I've actually been beaten yet. Some of the prices have seemed extraordinarily cheap, but I can't fault it. It's a market-leading policy. It's an A-rated insurer. They're a little bit selective on, what target property they're after. So when a property is built before 1945, that gets a bit harder. If it's a good quality one, then that will generally fit in okay. But if it's a bit of an old dunger, then that's going to struggle, and certainly we'd need to look at alternative markets for that. But for a good quality rental property, this is unbeatable. So certainly if you've got customers and listeners out there who want to get some competitive quotes, then it would definitely be worthwhile trying.
And is that mainly around sort of the stock standard 3-4 bedroom home, or if people are looking at multi-units or blocks of flats?
I haven't actually tested a really large block of flats. It's certainly okay for 2 or 3 units joined together. Certainly you find that with larger body corporate type apartment blocks, you get into other areas where I know there's a number of facilities and schemes that specialise in the larger blocks. So more for standalone or smaller units, like a couple joined together perhaps would be more suitable.
Every city and town in the country is slightly different. If you had a stock standard 3 bedroom 120 square metre property, I don't know, in maybe South Auckland or a Blenheim or a Wellington or a Hamilton, those sorts of places, just a broad figure what they'll be looking at roughly the annual premium?
I would say by the time you include government levies and GST, that depending on the value, the location has a loading on it, mostly in Wellington and Auckland, compared to the rest of the country. But you're probably looking at between $600 and $800. I did one with up against AMI, and their price was about $1,900, and I think our price was $900. So that was about a $430,000 property, I think, and it had 2 units in it, and we were literally half their price. So, I mean, that was an extraordinarily good one, and normally we might be a third less, but it seems to work pretty well.
Geez, that should be getting some listeners excited right now. Those sorts of figures, if they have someone who's 10 properties out there and saving $500 to even exceptionally one like that with $1,000, that's for one property that could be some pretty. Pretty great gains. That's for sure. And I've been looking around, and I get quoted anywhere from, very, very rarely under $1,000. It's usually always above, $1,000 to $1,400 for the sort of property that I was talking about at the moment. And as I said, there's not only one insurance person out there. The banks have their own insurance companies they work with, and give to people, and they're not always necessarily going to be the best or cheapest. So I don't know if you've got any comments to make on that, between that and a broker.
Yes, well, certainly, a broker is your advocate, and they're the ones that will prod you with all the right questions, especially to find out, what's happening with the property in terms of how it's being lived in. Is there any renovations on it? Is it temporarily unoccupied? Do you have short-term stayers or renters going through the property? Because all those sorts of questions, if you get them wrong, the banks often do their applications over the phone, and if you forget to answer one question right, they'll have it all recorded, and regardless of what you thought you were buying, it may be you find later on that because you omitted one important material fact, that effectively the insurance is worth nothing. So a broker will make sure you've got the property insured correctly. Some of the older properties, some of those more difficult situations, you don't necessarily always get, full-blown, gold package replacement value cover, but it will be honest cover, and it will work for the risks that are insured because you've declared everything that you need to do. The other thing that a broker does, of course, when it comes to claim time, is the broker goes into bat for you against the insurance company to get the claim paid, and will be able to assist you with all the form filling and the dealing with the assessors and things like that. So a good broker will make sure that your claim is resolved rather than just leaving you to deal direct with the insurance company.
That's so important, and I've heard of people in the other situation where they have been through one of the larger firms, and it's just been a recording, and they've had to go into bat by something that they may have said wasn't correct. And one of the things, if you do have to do an insurance here, usually there's some stress involved around it. So it's great having someone like yourself or a broker to as you said, go into bat, and they know what they're doing. General investors don't really know the ins and outs of insurance. That's why we've got an insurance broker.
Yeah, it's certainly easily proven or demonstrated that in Christchurch, despite the fact that there were lots and lots of issues, if you look at some of the broader trends, the clients that have had a broker have, generally speaking, got their claims dealt with a whole lot faster and more efficiently than anyone that was dealing direct with an insurer.
Right. That makes sense. And as I said, in insurance brokers, a lot like a mortgage broker, I guess, where you have everyone has their respective needs, and you don't necessarily know what bank, or in this case here, what insurance company is going to fix those or fit those needs. So it's obviously great to go to someone like yourself so you can get the right direction with that. You said before about the pre-1945s, and it's probably my experience is if you get anything before those dates, you're not going to get an absolute bargain when it comes to insurance. But the important part is it does need to be insured, and you said about it's a fair and honest way of trying to do it. What sort of things would you tell an investor straight up if you have a place that's pre-1945, what do you need to go and get before you really even come to try to get the insurance?
Certainly you want to be interviewing the previous owner to see what renovations he might have done to the property, because often that knowledge gets lost when property trades hands. If you're not sure, or if he wasn't sure because the previous owner did it, the things you really want to look at closely would be the wiring, particularly. So maybe you need to get an electrician in to do a report on the quality of the wiring and whether or not there's any work that needs to be looked at to bring that up to speed. The other things that the insurers like is checking the plumbing. Make sure you've got new plumbing fittings. Also, the piles are a big one. If it's a really old property and it's on wooden piles, then you'll probably struggle to that. If they're on concrete piles, that generally tends to be okay. Roofing isn't too bad if the roof's in good quality, even if it's old. If it's in good shape, then that should be okay. But certainly an insurer will start to struggle if your roof is rusty or there's signs of leakage or something like that. Probably the wiring, though, would be the main thing that would be worthwhile getting an electrician through to, write up a little report. And most of them might charge you a small nominal fee and write up a letter, that espouses the good points about the wiring, and hopefully an insurer can take that all on board.
Right, so if you haven't got any knowledge of the place, and there's obviously a lot of council files pre-1990, let alone 1945, aren't that thorough. The best way is to just get a building inspector or a tradesperson in that field, i.e. electrician or plumber, to do a report for you.
Yeah, and often a picture will tell 1,000 words too. So, honestly, insurers love getting lots of information, and if you can demonstrate that you've made an effort to provide them with lots of that kind of information, and particularly photos, if you can get some complimentary photos that, take the good side of the house. Insurers really like that sort of thing too, so they can get a feel for what it is they're insuring. A lot of them will use all the Google Earth tools and things like that to have a look at a house, but if that's not up to date, or it doesn't get the best angles, then it's certainly worthwhile getting some of your own photos done that really paint a good picture about the property.
Right. So what's if worst comes to worst? You have the property there, and the insurance company then says, no, we're still not going to insure you. Is there any outs or any other type of insurance you can get, or that's that?
It's pretty rare that you would get to that point, and certainly whenever we've got a property that looks hard, we would be asking 3 insurers at a time rather than just one, because you don't want to wait for one answer and find a no and then move on. So we would certainly be selecting an insurer that we think will react positively to it. It's always good too to support that business with other business. So if your insurer is just looking at one dungaree old house, they're probably going to be a whole lot less enthusiastic about it on its own, as opposed to if you were incorporating it with your portfolio of all your other insurances. They might take that on board a bit more easily.
Right, makes sense.
Worst case scenario, though, you'd probably have to put up with some limited perils cover from an insurer, and they're not always much cheaper either. You might still find that you're paying a similar premium for a whole lot less cover, but perhaps if you're committed to improving the property and getting some wiring redone and smartening it up and things like that, and also if you can demonstrate that it's professionally managed, you've got a property manager that comes in and does regular inspections, and you've got good quality tenants and things like that, all those little factors help. And honestly, if you go to trouble to demonstrate all of that to an insurer, they will appreciate that you've made the effort, and so in a way it kind of helps them make the effort back to try and take you on as a customer. So
okay, yeah, that makes good sense. Okay, just so moving on with you, obviously life mortgage and insurance. We're talking about here, but it's not the only thing you've really got to be aware of when you're buying a house, an investment, and all of a sudden you have a $500,000 mortgage, or even a $200,000 mortgage, or who knows, maybe a lot more than that. So what other things can you provide and you talked about with your clients?
Well, life insurance is always a product that you need to be looking at, and I think that gets a bit undersold. A lot of the ways life insurance are distributed again are through the banks. When they're providing the mortgage, they'll ask the customer, but I do get concerned and worried that people are buying what they need, or are they getting the right advice from a teller that just sits behind a big desk. But life insurance you need to consider, or other types of risk insurance, what I call that, risk insurance, if you are ill, is someone else going to suffer financially as a result of your death or illness? And if you're buying the property as an investment for your retirement or for an inheritance or something like that, and that all comes about too quickly because you die sooner than you thought, to a allow an insurer to pay that mortgage off, and suddenly you can appreciate the value of your investment at that time. So the rule of thumb really is someone going to financially suffer as a result of your death, and generally speaking, a mortgage would tick that box. And certainly life insurance is an important product that you need to think about, that is something that I distribute as part of my insurance business.
Right, and I assume something like an absolute minimum would be to have whatever the mortgage is against the life cover, or I suppose there's that many factors to take in consideration depending on how many properties you have and the worth value of them, I guess, also.
Yeah, I mean, it may be you don't need, like if you've got a dozen properties, it might be that you don't necessarily insure the full mortgage, but whatever it would take to reduce that financial burden on others that are left behind. And it depends on the person's individual situation. Life insurance is just one component, but you've got all the other income protection and trauma type covers that may fit someone's particular situation. So they do need to be analysed a bit more closely. Life insurance, though, a great starting point for a basic mortgage on a rental property.
Yeah, and I agree. As soon as you have a insurance on a house, life insurance has to really be the next in line. The other ones can follow on, and as you get advice and carry on with how you work and what you do, I guess. Yeah. Okay, so what other considerations or points you'd like to point out today of for using a broker? What you can offer that we haven't sort of covered, and anything else you like to add?
Well, certainly I'd reinforce the concept of using a broker. They are your advocate. They're your ally when it comes into the insurance battles that people have. They can give you the right advice so that you don't need to have to go around and interview all the different insurers and analyse their various products. Our company, Hutchison Rodway, has a market-leading facility specifically tailored for rental properties, and I have found it to be very, very competitive, and it's a good cover, so certainly promote that. Look at the issues that people have with buying insurance direct off the banks and off the life insurance companies. Well, banks in particular have more complaints with the Ombudsman than any other distributor, so I guess you've got to look at those sorts of questions. One thing I didn't mention, our rental facility also can tailor some slightly higher levels of cover for landlords' chattels in the property if that's a need, as well as loss of rentals. That's a real important factor. A lot of Christchurch properties had a loss of rentals cover for 12 months or up to a certain dollar value, and like in Auckland you might find that there are some pretty big properties where the rental income is quite a bit more than what some of the policies can provide. So there's a little bit of extra cost with that, but there's some small adjustments that we can make in our rental facility as well.
Great work. And if a customer wants to sort of come and see you, it's a matter of filling out or having a chat to you, establish what their needs are and how you can fulfil that, and then just doing it all online and to move forward, I guess.
Yeah, certainly it's always worthwhile having a chance to talk to someone, but we can do a lot of it by email as well, and we're available anytime.
Okay, so if someone wants to get hold of you personally, Chris, for your work and experience, how can they get hold of you?
Okay, well, my phone number is 03 578 6140, and if that doesn't get answered, it'll flick straight through to my cell phone, which is 0274 579 004, and then my email address is chris.lane, so chris.lane at Hutchison, HUTCHISON, Rodway, RODWAY.co.nz.
Excellent, bit of a mouthful, so you do have to spell it out, yeah. All good.
Website will also come up under that Hutchison Rodway brand as well, and you'll be able to see the different sites for the company, including our Marlborough site. So if you click on the Marlborough button, you might even see a smiley photo of me on there.
Lovely, beautiful too. Okay, hey, thanks, Chris. It's been very informative, and I'm sure there'll be a bit of interest in people listening about that rental property insurance the Hutchison Rodway now have tailor-made. So thanks for your time today, and hopefully some people will be in touch.
My pleasure. Thank you, Mark.